Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. Let's get right into it. Very active day today. Two-sided trade. And a number of structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab community, as well as a library of webinars on the process I'll be sharing with you. And like everything, no matter where you hear it, you have to vet any ideas you see or any processes and make them your own. There isn't one way to trade, in my opinion. However, if you don't have a statistical edge, then really you might just equate it with gambling or entertainment. The business of trading is very much a business of random environment, complete uncertainty, which of course yanks our emotional string, right? But also statistical probabilities. And that's what the basis of the TraderLab is, and the structured trades that are available to you in the TraderLab, as well as the TraderLab community, and a lot of additional education that's available at no cost in the Bookmap Discord TraderLab and the Bookmap server. We'll get into that later. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Please grab a pen and piece of paper. I always like to give you a couple statistics. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, and you do need to do your own work in order to determine where you actually have a trade that gives you an edge. Remember, the business of trading is like gaming. It's very similar to casinos in the sense that casinos only play games that have an edge that favors the house. Each game, let's equate those to our setups or structured trades. Each game has a statistical edge in the casinos, and structured trades have a statistical edge in the TraderLab. The thing about the casinos or even trading, that the outcome is completely uncertain and random. The cards coming out of the deck in the casinos is random, and the way the gamblers play the cards is random. In our world, the way the other participants interact with us is random. An iceberg, an algo, a news event, anything can come in and disrupt our trade. It just takes one other trader to interfere with the flow of the market, and that can take us out of our trade. Now, while we are personally attached to the outcome of every trade, casinos are not attached to the outcome. They rely on the statistical probabilities, but the only way they get that statistical probability is by dealing the cards exactly the same way and playing the game exactly the same way. They are not emotionally attached. Because of our emotional attachment, we move our stops, we bail out, we skip the next trade because we're emotionally attached to the stop we just took on the previous one, or we have 2-3 winners in a row, and now the dopamine and the adrenaline is flowing, and then it distorts our perception of what's right in front of us, and we think all of a sudden we can walk on water. Neither of those work in the trading business. Casinos do not do that. So and by the way, casinos lose. How do they, quote, feel about it? How about this? They don't feel anything about it. What they do is they understand they're in a business, and all businesses have cost of production or overhead. When we take losses, assuming we're trading with an edge, it is only overhead. Now, it's a bit of a reach psychologically to develop the discipline and to short circuit the fight and flight responses when we're in an uncertain environment, because they will interfere with your intentionality. And if you cannot control yourself, there are ways to manage it and get control. But you need to understand the mechanisms that interfere with your intentionality. Because if you have the best trade plan with the best statistical edge on the planet, and you can't execute it, then it's all for nothing. This is what the business of trading is about. This is what the TraderLab community is about, and you're all invited to visit the TraderLab. If you're in YouTube, there's a link. There's no cost to become part of the TraderLab community. It's a serious community. It's not romper room. It's about the business of trading. If you're interested in developing a career in trading, the TraderLab might be a good place to stop off, drop in, say hi. Okay, we're opening today higher inside of yesterday's range. Whoops. Let's see if I can find the open here. I think it's covered up. This is yesterday's settlement, so we're opening up here someplace, and I believe it's covered up. Let me just look elsewhere. Just want you to know where these levels are. They're kind of important. I can find them. Can't find them. Guys, where's the RTH open? It's covered up here, it seems. How about it? TraderLab, 98 quarters. Thank you very much. Okay, it's covered up. This is the RTH open. We're opening higher in range. We have the following. Overnight high, ETH high, right here. Overnight, and now this, because we're opening here, it's a high probability target, but what are you going to do with that? Not much. Overnight volume point of control. This is from the ETH, which is over here. And this is where the highest volume was. That is like your retail price if you went shopping in the store. And there's a probability of 82% will get there. And again, past performance, not indicative of future results. You got to bet these for yourselves. The naked volume point of control. This is yesterday's RTH highest volume. These are both in the same location. This suggests, number one, acceptance, but also the possibility for two-sided trade. This is when coming in before RTH, before anything gets going. And the possibility of getting here is 67%. So 82%, 67%. The overnight mid, which is down here, let's not forget about this wonderful statistic, 72% probability. Taking out the previous higher low, 81% probability. Now, we do know we are in an uptrend. And there's one other, by the way. The first hour's high, which we don't know where, of course, it will be, which is here, but we don't know at the time, has a 67, almost 68% probability of getting taken out. So based on the open, now that's the open. Now let's talk about the quote context. Context has been up. Yesterday we made an all-time high. Now this morning I posted in the TraderLab that we have made sequential all-time highs, I believe, I can't see it, the last 3 or 4 days. What happens is, as the market goes up, sell stops are going to be trailing under these lows. At some point, and nobody here has a crystal ball, I mean, if you've got one, I have a magic 8-ball, it doesn't work so good. But if you have a crystal ball, come to TraderLab. So the idea is, if the market's going up, and sure, it's bullish and until your eyeballs fall out, but the market doesn't go usually in one direction. It rotates on itself because as the market's going up, there are buyers or longs in the market and there's sell stops. So for me, coming in today, I was leaning a bit for longs early and then shorts. And then after that, it's wherever, using the statistics as a gauge. So for me, this is high probability. So for me, then, if I go up early, I'm looking to fade it. And this is just, I'm saying this is a trade plan. It's not a prediction because nobody knows. So I don't know, but I do know that this is the best price, you might say, or the accepted price. So if that is the case, then if I get a rotation up, I'm looking to sell. So let's go take a look at that. Now, there's a number of structured trades. So this is sort of the high view of it. And the thing about it is nobody knows what, will, where, or anything. It's part of the joy of trading, right? So if we know we don't know, we have to try to read order flow in alignment with levels. And this morning, I didn't trade as well as I liked to trade. Of course, I always like to trade well. So, but it was a bit choppy. So I found I was taking trades, getting scales, getting taken out. It was, and I'm only going to go into trades that are structured here. So let's go take a look. So we have the RTH open, 8:30. Get over here. There you go. 8:30 Central, which is basically right here. So what I see here is we open and I see some selling. So let's go take a look. I have the ETH high, which is the target, has a high statistic, but because we're opening right here, I'm not thinking much about it. And I want to see what happens. So right here, and I trade aggressively, and I always mention in TraderLab that the opening trade is not a trade for developing traders until you have everything else put together. This is a place to narrate, but I find it's a very aggressive trade in this open because of the speed and the opening volume that's going to go through. So I want to show you the first trade I took. So here, let me try to open this up for you. So right here, I see selling at RTH open. I have a 91 stops coming out. I see my buyer. I got my ETH high, and I anticipate potentially sellers, up here. And now I'm looking at it, and I'm going, I'm looking for this as my target. And this would be a mean reversion trade. Underline the word mean. So this is an aggressive trade, and I always say this is not for the faint-hearted. So I have my buyer here, and if it doesn't keep going, that means there's absorption. Let's look here at order flow. This is micro high volume structure right here. I'm going to label it. Now, I'm only going to show you this because it was a trade that wasn't exactly pleasant. But I want to show you what the micro mechanics were. And again, remember everybody, these are not trade recommendations, and this is not a structured trade. This is a microstructured trade. It is a speed kind of a thing. So you need unconscious competence. So I have a buyer here. I see my buyers here. Remember, sellers here, they got absorbed by the buyer right on the open. Buyer, buyer, buyer. No more buyer here means buy stops coming out. I got my overnight high. This is where now this starts at 0 for the volume. So this is very sensitive on the open. I see buyers here and I see a seller. So right here, I say, okay, I had buyers here absorbed, micro high volume. A seller here was absorbed by the buyers. So I have sellers run over, sellers absorbing, buyers absorbing this seller. Seller here. So this is the fight right here in this couple ticks. Watch the trade. Now, I'm only telling you to watch the trade, nothing more. I have nothing happening here. I have a selling iceberg. So I have buyers here, sellers here. Nothing going on over here. Now, there is buyers and sellers, but I'm not seeing the delta, any volume of delta. I see nothing here. Remember, these buyers were absorbed. This is a contested area. I'm going down into the subatomic, just so you know, electron microscope. Buyers here. There's buyers there. There's buyers here. Sellers. Come up again. What's too high? At the moment, this microstructure. No buyer there. One stop. 91 stops here. Stop divergence. Location. I'll show you this thing. And there's my seller. Okay? This is a short for me. bad trade in the sense of, you'll see why. Now, right here, the teeth are chattering. This is where this fails. So what do I have? Seller, buyers come right back in. No, and I'm just taking you into this so you could kind of see how to read order flow. So I'm using order flow and micro structure for this trade. This is a short, right? So I come back here and the teeth chatter because my stop is right here. Now, this is a very vulnerable place. Why? It's the opening swing high. That's why I always suggest, and when I say suggest, I mean strongly suggest, that TraderLab traders do not take this trade. You'll see why. I come back here. Buyers, nothing here. So what do I see up here? Let's go back. Buyers absorbed. Why? And how do I know it's absorption? There's nothing above it. Buyers come back. One stop. Stop divergence. And variable high volume node, taking you back through the process. Sellers take over. Buyers counter. This is now the new retail price. There's more volume here than there was up there. So this is my resistance. This is my resistance. I pull back. Buyers here. I pull right here. Nothing. So nothing. He was absorbed, assuming he's a he. Break low. Looking good, Lewis. Pull back. I'm thinking the trade is okay right here. And I'm going for this. I just want you to see the trade. It's very aggressive. And again, not for mortals. Right here, I don't see any sellers. And I'm going, among other things. I see a seller here. And I'm going, and I'm cheering, like we all do. And I come back up here. And now I have buyers here. And this is really the last chance for the short. Buyers are here. They're being absorbed. Buyers are here, being absorbed. VPOC migration. It needs to push off of here and take this out. Stop. Okay? I just want to show it to you because it's a trade I took. Again, that's not a structured trade. It's a trade I took. So I get taken out. Okay. And then I'm up here again. And I'm going, oh boy. So I see this. I see this. Right here, I see the trade. I'm going to show it to you. So I come out here, selling iceberg, only 3 stops. What is that? Stop divergence. Now here I see a seller. I come back, I take this out. I'm still stalking the short. I see a selling iceberg. I take him out. This one. So I know I don't have a short. I come up here. Now, remember, 211 stops here, including yours truly, or wherever it was, which was like actually here, I think. Now I come up here. 62 stops. 3 stops. Selling iceberg. Nothing up here. I see a seller here, and I see this. Nothing. So I have high volume structure in here. So I see my seller. I pull back here. I break low. I sell in here. I'm going here for my scale, and my stop is above the high of the day. It's called mean reversion. And it's fast and furious, It will make you lose your breakfast. So I get my scale. I'm going, okay, if I can get under here, I'm going to be in good shape. Because that's where the absorption was of these sellers. And I'm cheering. I'm going, gotcha now. No, not so much. So here's how you might read this. When you see this, and there's nothing going on here. Here, let me open this up. You can see it. This is absorption. That's what creates this. On the opposite side, we have the same thing. There's absorption there. Remember, the antenna goes up with absorption. It's like, oh, there's a seller absorbing the buyer. Usually they're icebergs, but it could be anything. And we come back up again. Stop divergence. selling iceberg. So look, selling iceberg, but he went through it. Absorption here. He went through it. What about this? I don't know. Do I know? Nope. Wish I did. Don't. But what do I see? I see nothing up here. No volume. And if you look down here, you can kind of see it too. This is delta. What I'm seeing is the market's going higher, delta volume, and I got less. When you have less of something, that's the old school divergence, isn't it? Now, I can't be looking everywhere. So I just want you to see what else is happening. So even though there's buyers here, they're weak up here. Anyway, just saying. So that's the short. That's how I read the short. Now, here, I'm looking for this to go, right? And all I do is come down, come down here. And what do I see here? Seller going to zero, except absorption. Now I come back here. So I know the trade will fail if it comes back above. And I'm going for this because of an 82% probability to get over here. So I'm trading, the way I was looking at this was, well, this was an aggressive sell. You know about this one. This is what they call the Hail Mary pass, and it's not a smart trade unless you're okay with taking stops. I frequently will take a stop on these trades. Yeah. But if I get on to something, I can, it can be a good payday. But it's the speed of response on the opening trade. Because if you're not unconsciously competent, if you can't execute quickly so you can get risk neutral, it's going to be not nice because there's no time. So this can be more intentional because you get the break and you get the test of the volume. This is more a standard TraderLab trigger. That's why this is, I would say, more workable for most. And this is called mean reversion. Mean reversion is outside in trading. And the goal of this trade is to find too high, get under here, take these guys out, and then down to there. So I'm just telling you that's what the trade is for me. So anyway, it takes me out again. I'm starting to get, I'm going to tell you how I'm starting to feel. I'm starting to feel frustrated. So I come outside again, and I'm starting to question my plan. I certainly am. I'm saying, what's happening here? We're coming down, we're making new highs. We're coming down, we're making new highs. We're coming down, and the buyers are very active in here. We're making new highs. So I come back up again. Now I'm above this one, and I'm really getting a little stretched out in the brain. I'm really going, is this the thing you ought to be doing here? I'm now at yesterday's value area high. So this has a probability. Let me give it to you. And what a value area is where 70% of the volume took place for the full previous RTH session. And often what happens, and this is from Market Profile World, we will come back and check this. Well, it has a 70% probability. So I'm going, okay, I'm out here. I have my volume point of control below me. I've got my overnight VPOC. I'm still thinking mean reversion. So let's look at the trade. 56 stops, buyers, selling iceberg. So right here, I see my buyers, and I'm thinking, yeah, it's going to keep going. I'm aware of this, so let's watch. Here, now I don't know, when this kind of thing happens here, I'm just watching it because now it stops. What I do is when it's directional, fine, if I'm on it. If it pauses, that's a consolidation, right? And any time frame or fractal. So if this becomes too high, and I can't tell it's too high until hindsight, and I break away from it, this high volume, this area where the sellers took over is now resistance. If it comes back here, I'm looking for a short. And it doesn't have to come right here. I can also get short here, and my stop goes here. I'm just letting you know. So I put this one on, and I, again, got mean reverted, and my stop was here. I got taken out. So, it's the same as this trade. You see, boom to bang, bang to bang. It's the same trade, but I'm not getting under this. So it's really, so I was getting rather frustrated, and I'm saying, gee, you're really not with it here today. So maybe not. So let's just go a little further. So now I'm the dazed and confused. So I come back up here and I'm going, am I really out of it here? Truly asking myself about that, been asking myself that a long time. But because I know the market's making higher highs and I've been fading it. And basically what's been happening to me is the market's going higher and I've been trading these counter rotations. And I've been coming back here, which is what the trade is, mean reversion, other than the opening trade. And I'm getting squeezed out. So I am questioning and I'm going, well, I have an 82% probability below me and a 70% probability there. I really like this statistic. However, it seems you're on the wrong side of the story here. And I'm going, well, I got to have my mind open. I cannot close the door on anything. If I'm following my plan, I know I have my probabilities of coming back here. So my job is to follow my plan, even though emotionally I am having emotional state about it. I want you to know. I go through the same thing you guys do. And I can't see your questions, so put them in there and I'll do my best when I come up for oxygen. Let's look at this. So what I have been looking at is the consolidations. And for example, we're coming up. Let's just look at this. The market's directional here. I see a buyer. I see a selling iceberg and absorption. So that's a seller. I have a seller here and I have buyer absorption. So I'm seeing the buyers. I'm going, well, okay, sellers got run over here. Thanks for playing. Buyers are here. There's sellers here and the buyers are absorbing right here. So I'm going, well, that's interesting. I really would like to see a seller here to think that there's something going on. There isn't. So I'm watching. Buyer is here. Up we go. I'm going, well, that's nice. Here's another seller. So I'm watching the absorption and I'm looking for consolidations. Consolidations, which look like this, because it's chop, chop, chop. It's rotation. It pauses and rotates. What it is a micro auction, if you will, because all a consolidation is, if we want to think about it, sellers are on one side, buyers are on the other. What do we know here? There was a seller here who got absorbed by buyers. There was a seller here, got absorbed by the buyers. Let me pull this down a little bit. And here's what I'm seeing. Okay, you can see it clear. Buyers, so the sellers are here, the buyers are taking them on and absorbing them. The sellers are here, the buyers are taking them on and absorbing them. 17 buy stops come out. And it's, oh my goodness, going to the moon, Alice. What is this? Stop divergence. So I have a higher price. I have less buyers. If I don't come above here, then in the micro structure, which I can't tell, I'm going, deer in the headlight move, but I know my sellers are here, even though the buyers are absorbing them. Okay. But here, I don't see buyers above yet. So I know this is an important area right here. So let's look at it. And I'm looking to get short, maddening as it is. Sellers are here. Buyers were here, absorb these guys. So I'm in this looking for a place to get short again. And as I get further away from the volume point of control, which at the time is somewhere below, it's a yellow line here. Let me just show you. This and the mid and the VWAP are going to be targets if I get a short on, because I can anticipate buying at the mid or the VWAP, so I have to scale. If I get through this, then I come here and I come out the bottom. That's the plan. And that was the same plan for the other trades, as much as I'm starting to question my plan. And I am. What I'm saying is, that's emotion. But it is a fade. So it is a counter trend play. So let's look. So I have my buyers, my sellers are getting squished. I have stop divergence. And right here, I go into my chop. My buyer is here. My seller is here. This is the fight. There's the high volume. Let's watch it. Seller, short, stop. Now I'm going here for scaling. And then wherever, then it's trade management. So let's look at it. So the thing with this is, if you could sell it here, because here's the trigger. Break, here's the buyer. The buyers are absorbed here, which we only know after the sellers take control, okay? Because you won't know here. You might, and I suspect it, you see, so I'm ready. So there's the seller, and there's the buyers. Right here, this buyer can't get over this seller, and this buyer was absorbed, as was whatever is up here. So that's how I lean on it. So I can run a very tight stop in here. But let's assume that we don't get in here. We break here. We pull back where? To the buyers that were absorbed by sellers. Okay, so you have this entry, and where else do we have an entry? Right here. So all these are viable locations to get involved. This is the target. So once again, in the short area, looking to get these longs out. What I'm trying to do is, I understand the market, is bullish and all this, but the market's been going up, and I'm looking to get these buyers out. So I will trade. Well, I trade long, short, upside down. It doesn't matter. So this is where I scaled, and then the VPOC is the next target, and then it's hold for the overnight VPOC. So it was to here, and then I'm looking to come out the bottom. Well, I should only talk about two, and I'm going for this. So, here we go, as they say. So scale, target, runner. Or let's just say, if you were trading this, you would either just be here to here, or you would be from here to there, and then there. It's all up to you. The key is to get risk neutral. Everything else takes care of itself. We all take stops, by the way, so that's part of the joy. So right here, look what's going on here. I went from there to there, came above, went from there to there, came above, went from here to here. You see what I'm saying? Back above. Now what happens out here? And I'm going to tell you, I'm thinking to myself, you could be on the long side. Maybe that would make more sense. So here's what I know. This is too high. Okay. And there's my, back to VPOC. This is called mean reversion. Now I come back out here and I go, well, here we go again, So right here, I know my sellers were here and my buyer, and and I had my stop divergence, right? So I'm coming up and I'm thinking, well, where's this thing going? It's just, I'm getting like, what's going on? Really am. So here's what I have. So here, my sellers were absorbed. There's a buy iceberg. Sell stops came out. Sellers took a shot here. This is the end of it for the short, unless you're trailing out here, which depends. And now for me, I will do that and just take a few burgers off, because I'm looking for a target below that has an 82% probability, and you have to vet that for yourself, of course. So what do I get? I get taken out, and I'm just going, never mind what I'm saying, just what I'm doing. And now I'm saying, okay, I guess we're going to take out that last high. I come up here, and what do I see? So I'm hanging out, and I'm seeing my buyers, my buyers, my buyers, and I take out, I pop wherever it was here, the high. I think by a tick or something. Wherever it was. I can't remember anymore. So I think we took it out. I don't remember. Or we didn't. I got taken out. So right here, I'm not sure if this is the last trade I was just talking about with you guys. Is it? I think, yeah, here I see it again. Absorption. So buyers, sweep, break. I put a short on again. I come back here. I scale. Going for the overnight volume point of control. VPOC migration. Now, this is very important right here. This is saying there's more volume, and we've had a lot of volume here than at the moment than there is anywhere else. So this comes up, and this is a problem because what this is suggesting is this might be too low. So I'm looking at this and I'm saying, oh, crumb, among other things. And so right here, this is either going to break low and we're going to come back here, or we're going to continue the squeeze. So right here is like a fulcrum for me, and I have this seller up here, and I'm watching this to sell it here. But it has to give me the right behavior, and I'm going to lean against this. Now, this is probably not what most of you will do, should do, or anything else. So I'm looking here, and it breaks high. So I'm going up, but I have my seller here. Watch. So now I'm here. I get my icebergs. I get my absorption. I had absorption here. Now, the thing about this is what I'm showing you in order flow. I am very aggressive, and I'm not recommending this. I know there was a seller here. I also know there's buy stops right there. You see? So what happens here? I break and I come up. Now, right here, it looks to me like we're just rocking. So I have nothing right until I see this. And I'm going, well, this is interesting. Right here. There's my seller. What do I have here? Well, I got my buyers here, buy stops, a selling iceberg, buyers, look to the left. You see this price at 05, and you look to the left, you see the absorption all the way over around 8:48 Central Time. It's the same. So what I know is if I don't get above here, then these buyers are getting absorbed, and they are. There's the iceberg. Also, what do I see? Stop divergence. 26 stops coming out in here, and then only one over here, and the buyers are here. So I'm looking at this. It's a suspect. Watch. We break under the volume point of control. Right here, I have a buyer, and I'm thinking pull back higher. I have this. My buyers are here. My sellers are here. And I had a buyer here. They failed. Now the alarm bell's going off in the brain, and I'm looking for the short. There's my location, and I take the short. Back to here for the scale. Does this look familiar? Watch. VPOC migration target. Finally, I'm going, come on. You don't want to hear what I'm talking about here. And that was the overnight volume point and control, 82% probability. That's why I was selling this thing. Does that make sense? Any questions, guys? How we doing on so far? Please give a thumb up in YouTube. And remember, if you're interested in visiting the Bookmap Discord TraderLab community, you can download 60 PDFs of these structured trades. Now, what I am doing is not necessarily what you would do. You have to vet these. I'm trading something called mean reversion. It's a very difficult context. And I always talk about it, and in a specific, in the TraderLab, we talk about mean reversion because you're trying to find an outside edge. That's what's hard about it. So you really have to be disciplined. Now, I am looking, and I notice we haven't done it yet, for the market to fall out the low of the day. It's not a trade recommendation. Now, I'm just saying because it's part of my plan for today. Doesn't mean it's going to do it, you know, but we'll see. And I posted that in the TraderLab early this morning. Now, the fact that we got up as high as we did, different conversation. And these are not trade recommendations. So this was where my target was. Actually, it was like right here. I always leave a little for the sweeper. So I have an 82% probability here and a 70% probability there. I also have about a 70% probability of getting to settlement. And let me give you the statistics. Yeah, about a 70% to settlement, and then the overnight mid 72%. These are next targets for shorts if we fall out the bottom. Just saying. Any questions, guys? Maybe I should just move on, huh? By the way, there were long trades also in here. I guess I can. Well, I'm going to move on, and let's because this is interesting right here. We have a structured trade. I want to show it to you, and this has been this is not the easiest day to trade, at least not for me. Let me talk about the long over here because this was pretty interesting. We had a long, and I don't forget I've been going short, but I got my overnight volume point of control. Now this could be a long from this area. I did not get long here, and I kind of wish I did, but I didn't. I just didn't do it. So when this shifted down, this is what's interesting about this one. So this becomes too low, which we only know in hindsight. There's my buyer. Here's my pullback and test. I did not get long. I just didn't do any of it. And I wrote it down as an error just because. What happens to me, it's just something, you know, it's just my own weakness, you might say. If I'm going this way, for me to flip the barge around quickly does not happen because I'm still looking at the potential for this and this. I don't know if it's going to get here or come, you know, I don't have any clue on that stuff. So I don't know. So, you know, this is an area to exit or take a long. So I just did the exit. I didn't do the long. So I'm going, oh, that was smart. And VPOC migration. Right here, the market's either going to push down or reverse. This was the reverse. So this sets up along to here, to there, and maybe out the top. And it actually did. And the reason is, remember, at 9:30 Central Time, the first hour, we have the IB. That's the initial balance. That's the first hour of RTH. The IB high has a 67-ish, almost 68% probability of getting taken out. That's this. The long is a fabulous opportunity. Truly is. And I did not get it off of here. I just sat here and I, you know, just said, well, that bus is left. But here's the beauty of having structured trades. And if you're in TraderLab, this is a structured trade. What is it? I have a 67% probability that I'm going to take out the first hour's high, which is here. I pop it right here and I come back in. This is a mean reversion trade, not qualified. I come back and now my volume point of control, this is here. In other words, what's happening? too low, too low, retail. If I break below it, I can come back here because this was where it was too low. And we have a structured trade in the TraderLab called VWAP to VPOC. So this is the long. So I missed that, but well, I saw this. So I saw this, and this is called an IBF. Actually, I will tell you now. I trade counter trend. I'm going to tell you, I took this short, and this is where I was going. I turned around, and this is not a trade anybody ought to take it. I'm just telling you, I took it because here's why. I will tell you about it because maybe some in the TraderLab took it. I know there's stops here, and I know this is the IB high. I know that if I come above the IB, because there's stops, and I fall back inside, it creates something called the IB failure. I looked at this and I'm thinking, well, this is the IBF. I'm going to take it. Where's my target? It's here. And then if I break below here, just saying, and come back here. So, and you'll see how this starts playing out because I see it's playing out right now. There's no way to know how or even if anything is going to manifest itself. So I took a short from here to here. I got long from here to here. And then I'm looking to take this out, and I'm going to show you where my target is. Well, there's a couple more setups here. Let me talk about these. So bang to bang, and then we come out the IB. We take this out, squeeze the shorts out. They get squeezed out. So now I have the following. So I had IBF, aggressive counter trend trade, subject to your trade plan, guys. For me, I trade whatever. Long from here to here, structured trade, TraderLab. Take out the stops here for this leg. This is a little more advanced. Now, I want to point something out. When I'm talking about structured trades, all of it is elective in the sense of you may just take longs in this context and just use the shorts for trade management. That's what you can do. So when you see a short, you just hit the eject button and the canopy blows off and you're waiting for your next long. Or subject to your skill and which way the wind is blowing, you could be exiting along if you're in it, all right, and also fading it to here and then getting long here. Or you're out of your long. If you were long, you're getting long again. Or you're getting out of your long and you're getting short and you're getting long. What is your plan? You could do it either way. But I think the better dollars for developing traders are not in this, but in that. So this is, again, a function of trade plan. So let's look at this thing. So we have another trade. So it's here to here, out the top. Okay, that's this trade, structured trade. Now we come out the top and it's party time. We have another structured trade here in the TraderLab. It's called the IB continuation trade. I'm going to show it to you. And I'll look up if you have questions. Please post them because I'm going to come up for oxygen soon. And I do want to get into the shorts again. Notice we came back currently to the overnight volume point of control. Isn't that interesting? How the market reacts to these levels. This is what the auction is all about. Right there, remember? So we come up looking good, Lewis. Now, right here, I have liquidity. This sitting, and it's a little hard to see because of this noisy algo. Let me... You see this here? This is resting. So it's sitting right here. So when I'm coming up here, actually, this is the IB continuation trade right here. Right here. So this is a long, this is a scale. Then you're looking to come through here, which is here it is. Now there's a couple ways to do this. The IB continuation trade is right here. I'm going to open this up, and this is a long. So you have long here, scale. Stops are above this swing. This is what kind of makes it nice. break above the IB again, pull back. This is a long in the TraderLab. This long, you get scaled, and the target is that. And I posted this in TraderLab. It's 57.15. So I'm sitting here, and I post this, and I'm seeing my buyer, and watch. And by the way, luck has a little bit to do with this. My exit was at 14.5. Okay, limit order. I throw it in there, and I give it a couple ticks. Always do, and it gets to 14.25. Now I don't know anything about that at the time. I'm seeing absorption. I'm sorry. Buy stops. Does this look familiar? Two. Stop divergence. This is why I like to stop an iceberg detector, among other things. But it lets me see absorption and exhaustion. Now, I don't know, like everybody else, what's going to happen. I'm seeing my buyers. I see my seller here, micro high volume. Sellers are absorbed. My buyers are above. Looking good, Lewis. Target's right here. High volume. Buyers are above. Looking good, Lewis. Only two. I got 63 buy stops here. I got two here. So I'm paying attention right here. I got my order. I'm going, come on. You ever talk to the market? You'd be surprised what I say. And I'm looking at my limit. I see this. I'm concerned and aware. No clue. I see this guy. And I'm looking, come on. And what do I see? I see that. So I'm saying we got to get above this seller right here. This is where these buyers were absorbed. If I can't get above this, hasta la vista, see you later, alligator. See another seller, I see no buyer. I'm not above this. I punched out of the trade. Trade's over. Now, let's watch. I'm going to come up for air, by the way. Questions, guys? So we really got to pay attention now on the downside to this 91 area. That is an outside edge. If we get under there, we could have some fun. But at the moment, we're in what's called mean reversion. If you're not familiar with what's going on, which is always random, then you really need to develop an understanding of market mechanics. So I got out here, and this was my last trade, so I haven't paid attention to any of this stuff. Let's see if we can see a short here. Well, this turns out to be a short, but for me, it's a long exit. And I wouldn't be able to get short anyway, because my brain kind of locks into dealing with my long, not thinking I got to manage my long and get short, unless I have time. This gave no time. But let me show you a couple things. So we know this is too high, nice to know in hindsight, but you don't know. And for me, I don't know it's going to be the high. But here's what I know. This is what I wanted to show you. I have resting liquidity. Now, the fact that it's sitting there doesn't mean that it's going to get there. But I thought it was a pretty good, you get your exit missed by 2 ticks, 1 tick, what are you going to do? So that's life. That's trading. It's all random. So this here, I see my seller. So this is potentially the high. And again, there's no way to know it won't come back and take this out. There's just no way. But look at the aggressive selling here. So if one was able to get short, this is where it's going. This is called mean reversion. And it's mean. All right, where's the outside? You saw me today trading these outside edges and how it would rotate and then push me out. That's the hard part of mean reversion, because you're trying to find the outside edge. Where is it? Wouldn't we all like to know? Now I haven't seen any of this, but let's just look at this. If this is too high, and these are distributions, so think of it like a consolidation. If you leave it, it's too high. We come down. This is noisy. I'm going to darken this a little bit because we don't need it. This is a variable high volume node. And here's how this works. The volume point of control, when it's moving around like this, it is based on where the highest volume is at the time in the developing daily time frame. And today is an annoying day, you might say, to trade. So this is the IB high. There's a couple possibilities here. Considering that we came outside and right here, there's a couple possibilities. We come back here and we bounce off it. But for me, not so much. I'm looking for the IB failure. So the IB failure is a mean reversion trade. Now, there's a problem with this because here's the mean. So I don't have location. Now, if I'm aggressive, and I'm not, well, this is not a structured trade, but see this? See this? See the high volume? So if you can't get in here, but this is too aggressive, I would say, for most traders. This is a short, but it's not a structured trade. And there's the target. And then you're going for the stops here. This is a trade that one could take if you vetted it. I'm going to show you the microstructure. The thing that is interesting, I find, in trading is once you understand how it works, it's like Russian dolls. You can go down in time frame and read the auction. Because what happens right here, so we know what happened up here. Okay, can't do anything with that. I mean, you see this? You could have shorted this. Me, not so much. But I'm just saying, this is a short. I didn't see this. Here, let me show it to you. This, now we don't know, right? Liquidity was sitting here. Buyers are trapped here. There's your stop divergence and exhaustion. Sellers are here. There's your trigger. The volume and where the sellers took over is here. This could be a short. Sorry about that. And again, I haven't seen this stuff. That was it. Not stop. I disconnect when I'm done with my trade, which was the long. But this is a short here. And then where you would be looking to come is mean revert, if this is in your plan. The other part of this is the IB would be your target because there's going to be stops here and potentially we may bounce off it and come back here. There's no way to know. So if you got short in here, you got to be scaling ahead of this, which would be here. And then the trade might be done. If we get under there, then it's here. And then let's go where else? Where was our last long? Not just the IBC, but here. So what's under this swing? Stops. If you took that short, and there's two ways to get into it. Up there, which might not be your trade, going to here for your scale, then here, and then you want to take this swing out. Or if you're doing what's called the IB failure, you would wait for it to break under, short it, and then you're coming to here. So there's two ways. Look at this. Where do we go? Stops. We're going for this. So if you were short from out there or short from here, you're going to here, to here, and to here. This is a structured trade in TraderLab. Is everybody tracking? I think I'm getting pretty caught up here. Notice what this is here. Variable high volume node. Another structured trade. It's really neat to see this stuff. You do something for many, many years and you try to share it. When I was first developing this, and this is back in the mid 80s, I was actually in a chat room, and I forget what it was called. They didn't have Discord, it was something else. And market profile guys, just strict standard market profile. Volume profile, not so much. Because this is actually, when was this? Maybe 2000. I don't know. But we didn't have volume early on. So it was time, 30-minute time segments. And the idea then was that if the market spent a lot of time somewhere, a lot of volume was transacted because we didn't have volume. It wasn't available back then. So volume became available, and I think it might have been, I don't know, 2006, 7. So I was in this room, and I've been trading volume, market profile for years at that point. And I was very, let's just say, pretty good at it. And when we got volume, I started observing the behavior of volume, and it was behaving differently than the standard market profile was. This is a variable high volume node. And what I figured out was the market is always speaking. It's a language. If this is too high and we leave it, we have the potential to come back and check it. The sellers are active here. We could tell. We took out these guys down here. These guys, I mean. Thanks for playing. And then a counter rotation or short covering is possible. If we come back up here, it's a possible another short to here. Because if this is too high and this is retail, the shoppers have a potential to come back and check this price. Is this really too high? You ever go to a store and you go, I'm not paying that. So this is a potential short to here and then down. Let's see what it does. Oh, I guess that's what it does. Now we're current. Questions, guys. Sorry for the delay. This is why I was shooting for the short side, because if I can get under here, now this is on the hit parade, and this, and maybe this, maybe not, but this. Okay. Questions. Do I use the footprint? Yeah, I do, but I don't need it. I've only started using the footprint very recently. It just, what it does is, for example, it's going to show, footprint's going to show me what happened right here, absorption. I see the same thing here. So I never needed the footprint, and I'm a minimalist, so I don't really like anything I don't need. But I put the footprint in here because Bookmap has a footprint. And I started using the Bookmap footprint, and I was using it along with another footprint. I have an Investor RT. So, yeah, but I do use it. It's not, it doesn't really change anything. In other words, in a footprint, I can see the actual contract that trade. Here, I see the delta, which is also showing me the aggressor and the contracts. It's just not giving me a number, specific number of buyers versus sellers at a price. It's showing me the aggressor. And then if I don't get the, and then I know it's, because when I compare it to footprint, they're really showing me the same thing, just differently. Notice this would be our target coming down, so. And these are all on the price map before the day even starts. Now, this I anticipate is going to go, as they say, south by southwest. There's stops under here. All the longs for the day got their stops under the low of the day, which is right here. When we get under there, it can accelerate. There's a 70% probability we get there. And I think a 70 overnight mid, remember you wrote that down? And this was all before, top of the string, before we ever got here. 72% probability of getting here. So when I was trading my shorts from earlier, and I was going for this, I was also going for this, and we might even do this. And these are not recommendations. Did I answer your question about the footprint? How are we doing in YouTube? Please give a thumb up. This is TraderLab. If you're interested, there's a link in the bottom of YouTube. You can visit the Bookmap Discord TraderLab community. It's a group of serious traders. This is about creating careers in trading. It is not a video game, and it is definitely not the easiest thing on the planet. If it was easy, everybody would do it. It is not easy. And it's what I mean by not easy. It's, I believe if you come to TraderLab, you can learn to trade. However, What is not easy is living in an uncertain environment. It is counterintuitive, and I underline the word intuitive, because intuition and DNA and instinctual wiring is what drives us to avoid risk. So if you accept you can't predict anything, and I'm going to suggest you cannot, you don't have to accept what but many of us come into this thinking it's just a matter of the right mix of tools, indicators and whatever, Fibonacci, Elliott wave, throw a dart at the board, and you create certainty. And then, of course, there's the ATM in the basement. The thing we don't understand is gamblers win. And if gamblers play in a random environment, they are going to win. The problem we have is because we do win, and we do, even if we have no edge, we think all we got to do is make it better. That's very logical. That's what I did. And I did it with systems. So I went beyond what we do with quote indicators as retail traders. I built trading systems. And I wanted to take the emotions out of it, how I felt, my fear. I wanted the computer to just put the trades on. Now, I was trading across a large group of asset classes, different groups. So it was, so grains, metals, bonds, S&Ps, swing trading S&Ps, everything was positioned, a lot of currencies, currency spreads, all this kind of stuff. So that's what I was doing. So I needed all of this computerized. So I did that many years ago. I think it was 1986, 1987. Wrote code and the whole shot, and spent a number of years with it because I was managing dollars. What I found that what I had to keep doing with it was going back and optimizing it, and thinking that you take what worked really well in the past, do walk forward testing, on a data set, and then here you go in the future. No, doesn't work that way, because today's trade is unique compared to yesterday or the day before, isn't it? Well, if you take that logic, then how can we trade today like yesterday? We can trade today based on what we know about yesterday, but we have to also be flexible to what the participants tell us about what they're willing to pay and who gets trapped on either side of these rotations, because that's what trading is. So it really is a different mindset. So I found that I was doing the same thing that I had done when I was using indicators. I just did it much better. It's called optimization. And I always say, what does it mean? It means curve fitting. You guys with your indicators who are tuning and tweaking, moving your trend lines and predicting what's going to happen are actually doing the same thing. And the reason we try to do it is we're driven psychologically for certainty, because we can't stand uncertainty. Yet every moment in this market or in trading is unique and uncertain. But there are probabilities, right, to come here. There's also probabilities to come here, and then to come either back here or squeeze out the shorts that are above here and come back here. Those are probabilities. If you were on the short, you would be going for this, and if it takes it out, you're looking for an acceleration down to the next levels. So how do you deal with this? Well, if you got your short on, the last one was right here, you would know you have to scale in front of this. And then it either takes this out and you go on to your next targets, or you're going to get squeezed out and you manage your trade. That I know. What it will do, I do not know. So what we do in TraderLab is something called narration. So it goes like this. The market breaks under here. So if this, and if it rotates that back, then that, and if this is still too high, think shopping, then this. What was too low? This. If this is still too low, then what? Then back here. Same thing. If this is too high, we break, we come back and check it. If this is too low, we rotate, come back and check this or that. If we don't get above here, then we can come back here. If we take this out, we go south of the border somewhere. And then we have open targets. Remember, 72% probability-ish, and you have to vet these for yourself. And that, by the way, value area low. Let me find that. I don't think it's a high probability, but what do I know? 58% probability. So, and if we take this out, it creates something called a neutral day. A couple possibilities. And I posted in the TraderLab this morning, the market has been going up, and there's a lot of stops accumulating under the lows as we've been making new highs. And I'm talking pretty much the last 3-4 days. So if we gain traction here, we can do some serious abuse. And this, notice this level yesterday, it's the same as that, and it's from yesterday. And that's from the previous day's RTH, same as this. And look what we did. That was yesterday's low. It was too low. That created, so that was the low of the day. Notice how the levels might work. That's why when I was selling, I was coming back to here and here. And I know if I can come underneath, I can still stay above this. I can come outside, maybe get here, maybe never get here. And if I come outside, I'm going to tell you the next possibilities, and they're not trade recommendations. If I come outside and come back inside, I can then come back here and back there. Because it's called mean reversion. It'd be the same process from the other side. But we have to get these stops out under here to come out and then potentially. So either we're going to come out, rotate, and accelerate. Everybody runs to the fallout shelter. These are the targets. As long as we stay above, I'm giving you something to think about here, then we can come out, wash out the longs from today. If we come back in, we come here. So it would be out here, through here, to here, to there. Or fall out here, and everybody runs for the exit, and who knows. That's what I have, and those are structured trades in TraderLab, and they're absolutely not trade recommendations. The thing we don't know ever is, will it? How will it? How might it? There's no certainty. Here's what we know. Too high, break, test, too high, too low. Too low. Test, too high. This is your sandbox. These guys got absorbed down here. You see the buy icebergs. You see the sellers. They were absorbed. The buyers are up here. The sellers absorbed them. If I come above here, I squeeze out these guys in this leg. If I come under here, I take the longs out, which to me is more probable because everybody who's long has a stop under the low of the day. So these are all shorts in TraderLab. You guys, is this making sense? And please give a thumb up in YouTube if it is. Even if it isn't, ask a question. This is TraderLab. So this is our next area. Remember, and remember the short I was taking? I showed you at the top of the stream. This is where I've been going. So I can go long, I can go short. This to me has a lot of meat on the bone because of stops. The thing we got to be conscious of is the sellers are being absorbed down here. So we have to watch the behavior when we come under here, if we do, because we might only get the stops, and we're seeing the icebergs buying. Icebergs like to buy into the stops. So we're going to hang out here. So in theory, if I have a short, which we have from up on the top, you remember that, This is a short in TraderLab. This is a short in TraderLab. This is a short in TraderLab. You got to be scaling ahead of this. So you'd be scaled. Your stop would be here. If you get taken out, boom, that's that. You get a few burgers and a side of fries. And the thing about this is, I think the probability of getting out under here is pretty good. It doesn't mean we won't come out and squeeze, because that's the way this thing kind of works. So where does it fail? Well, we know there's stops at the mid, so we could easily come up here, take these guys out, and then if we come back, we can continue down. You need to understand what's going on right here. Absorption is here. Absorption is here. Absorption is here. You see it? What do you do? I'm asking you because you need to know. If you have a trade plan, which is what we do in TraderLab, you already know what you will do. You do not make it up here because you're emotionally charged. The dopamine's flowing, the adrenaline, and, you're not in a rational state, actually, when you're here. You're emotionally triggered. So you need to have all this defined, and the work is done outside a trading house as far as what you will do. Remember what we know. Absorption, 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 absorption. Is this a reason to get out of the trade? What's your trade plan tell you to do? I know it's a reason to get scaled, and then it's trade management. Where is the stops? Here, here, mid, and VWAP. See? So you would know this if you're in TraderLab. What I don't know is what your trade plan is and how you manage your trade. And that's really a function of time frame. Now let's think about this. We have a leg here, buy stops are here. We have a leg here, buy stops are here. If you're in TraderLab, you'll know that. So then if you know this, then you have choices to make. You have to scale, and you either let it take you out, or when you read this, you exit, and then you look for the squeeze, and this is all subject to put the trade back on again from a different area. All trade plan specific. And these aren't recommendations. What do I know? That's too high. That's too high. So if I come up here and I don't get out above here, these aren't trade recommendations, it might be something to observe. Does that make sense? So let's watch. So we're going to squeeze, and there's stops here. There's stops here. This is too high. This is our next area to watch. This is an area to watch. This is an area to watch. We're just going to watch. These are not trade recommendations. By the way, if you don't want to take stops, you should be in a different business. The purpose of the stop is not to be right. The purpose of the stop is to protect your account from the random outcome of any trade. So this is too high at the moment. Stops are going to be here. This is where the closest swing is, here and here, where retail traders keep their stops. If you're in TraderLab, you will know this. You will not know what will happen. That's part of the thrill of randomness. So let's watch it together. And please post your questions. I'll do my best. And the best place to get answers is in the Bookmap Discord TraderLab community. Download the 60 PDFs of these structured trades. You can see them, many different examples, and then it's up to you to vet them and see what fits. The goal in trading, at least for me, is not to take a lot of trades. I'd prefer to take 2 or 3. But if the market condition dictates my trades, when they show up, my job's to take them. I'm in a random environment. Some days there's 3 trades, other days there's 40 trades. For me, I'm not saying it should be for anybody, but I'm just saying, and 40 might be currently an exaggeration. Let's say there's 15, 20 trades, because that's the condition of the market. I don't make that decision. The market condition. So we want to watch this, but there's stops here and here. I cannot step in here even if it goes to 0 from here. So I'm just telling you, because I've got my buyers. Let's watch. It's the VWAP. Here's the mid, and this is where the stops are. This is the last place that the sellers took over. And this is too high. So let's just sit here together and tour. Now, if we squeeze past here, my next area to observe is here. And that would set up something called, and this is not a recommendation. So here's what we got. We have this. We're going to observe this for behavior. And if we get through this swing here and take the stops, then we're looking out here. And this would be mean reversion. This would be, and the stops are going to be here. So if we come out in here somewhere, this would become potentially a short back to here. That's called mean reversion. It's a structured trade. So we have this, 3 levels to observe. And none of these are trade recommendations. For all we know, through the moon. Why not, right? Is everybody tracking? Whoops. One second, guys. Okay. Questions, please post them. If you're in YouTube, remember, you can be part of the TraderLab community. There's no cost. It is a great community of serious traders. It's about business, guys. Regime, I can't tell where the stops are. I know where the stops will be because of retail trader behavior. Swings, that's where they are. And you can see what's going on here. Stops are there. Stops are there. If you're a trader, where do you put your stop? There. Where else are stops? Here. I want to be watching here for exhaustion and a potential short. I'm also going to be looking out here for a potential short. And it's not a trade recommendation. Everybody takes stops. Haven't figured out how to avoid those, so I don't try. I just take the stop. So let's try to see this thing, if we can read it. I got to do a couple of things here. This here is important. I'm going to throw a line on here just so we don't lose it. This is too high up here, so we know that. Micro volume is in here, and this is kind of resistance. So we've got resistance here, here, and then the next location would be this. So this is a suspect. Mid has stops at the mid. So, and we also get selling at the mid, retail traders selling. Now, the volume point of control is right here, and the VWAP. So this is a dangerous spot. If you want to try to trade this, it's a very difficult place to trade. I would not trade this, even if it goes down here. I just don't have a trade. So I need it to be further away because this is the mean. So if I can squeeze out these guys, even this, if I can squeeze out, because stops are going to be here, and this is an outside edge of a distribution. This is called a low volume node. This is an area to observe. I'm running out of time. So this, I've got nothing to do. because I have a problem with the range, nothing else. If this was sitting out here and I had what I need, but for me, this is important, but it's a swing, so there's going to be stops. This might be a short here, and of course it could be a short here or none of the above and go straight north. Could do anything. What we know is this is an important level, and you'll notice that we haven't been able to get under it. That is a bit of a problem. And let me show you why. What happened yesterday? We could not get under it. Same behavior here. See, this is the auction. I know if I can't get under here, then we're going to squeeze out the shorts. So if I'm going to take a short, I got to be really careful and get risk neutral. What I suggest in the TraderLab, the traders and traders are in the TraderLab understand a minimum 2-lot configuration. The idea of a 2-lot is to, if you put the trade on, and everybody takes full stops, is to understand market mechanics and know that this is the mean or the retail price right here. So the better idea is to try to get, if you get short, if that's your plan, to get risk neutral here. And then either the trade goes on and takes these guys out, or this is still too low, and that's that. So that's why whenever I get short, I am looking to get risk neutral. And you saw me doing that with the mean reversion trades I showed earlier in the stream. By the way, remember, this stream's available exclusively to Bookmap Discord TraderLab participants for reviews, screenshots, circles, arrows, and, whatever. And this is, so you know, this is what the structured trades look like. These are, and I'm not a vendor. There's no course. This is just to help you, create some understanding of a methodology, order flow, all kinds of stuff in here. And you can download these. You can use the link in the bottom of YouTube if you're interested in doing that. Plus, there's a library of webinars. So let's watch this. And please give a thumb up in YouTube if you're finding this interesting. I've got about 3 more minutes. If you have questions, click the link in the bottom of YouTube. Come over to the Bookmap Discord TraderLab community. There's no cost. Post questions in there. There's a better chance that you'll get the answer you're looking for because our time is very limited. Remember what we're looking for. Stops are sitting here. And the reason I know they're stops, retail trader behavior. Write this down. Think like a retail trader. Don't act like one. So we're looking here and here. And these are not trade. There's nothing mechanical. So what I do is I have levels, and I'm going to look at the order flow when I get to these areas. And then I'm going to look for exhaustion and absorption. Let's see if we get it. Not a trade recommendation. We have this. I got buy stops coming out. Why? Mid. Thanks for playing. This is where retail traders keep their stops. Write this down. Think like a retail trader. Don't act like one. Didn't we all sell the mid mechanically and put our stops at the mid at some point? So can you learn from that? Okay, we're watching here. Not a recommendation. This is a very slippery slope right here. So we're going to watch out here. Now, if it blows through this, then I just sit back, But this is a trade that's in TraderLab. So we are going to stalk, not trade, stalk. Let's watch. This is the area. I am out of time.
7, 6, 5, 4, 3, 2, 1.
Gotta go, guys. Please give a thumb up on YouTube on the way out. It's very helpful for the stream. This is TraderLab. This is not a trade recommendation. This is about understanding how the market works, why it does what it does, and how you might at times get in alignment with it. Not a recommendation. All trades look the same, smell the same, and the outcome is random. Right here is absorption. Here's your seller. This is micro structure right there. This is your resistance. This is your potential scale. So you have to, enter very aggressively if it's your trade and you have a trigger. So the way this works is there's your seller, here's your micro high volume. If we come above here, the trade is over. There are stops up here. So you would know this because this is the other location here. So let's watch what it does. I'm going to sneak another minute in and hope I don't get in trouble. Please give a thumb up in YouTube. If you want to follow this and the rest of it, please click on the link in the bottom of YouTube. Leave a thumb up on your way out. Thanks for visiting the TraderLab today. I hope you got something from today's stream. Remember, in the Bookmap Discord server, there's education. There is no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, swing trading options. It goes on, and there is no cost. The same with the Bookmap Discord TraderLab. You are all welcome. Download the 60 PDFs of structured trades. Join the community. It is a serious community. It is about building out the business of trading. Hope you got something out of this, guys. Thanks again. Give that thumb up, and I look forward to seeing you tomorrow.